ForexDayBreak podcast, where we trade the Forex market with you. Entry, target, exit, and stop loss levels are covered when we walk you through every trade made in the show. 5% of Forex traders are profitable, and you can be among the winners. If you wish to find out profitable trade signals in the Forex market, ForexDayBreak is the show for you. Now, let's begin today's episode.
Good morning and welcome to episode 92. Forex pairs in this episode are Euro-USD. We see 4 waves out of 5 completed and can trade the last wave to the downside. We take a look at the price structure in pound-dollar. Are we still within the triangle trend lines, or is there hope to the downside? And Euro-Canadian dollar, we are trying to catch the reversal and trade this next wave to the downside. It is recommended that you will learn to read the market yourself and not just blindly enter trades based on my signals or from any other signal provider. I will not take responsibility from your trading losses or credit from your profits. One small message just for the start of this episode. Of course, this week is the Christmas week, and I am going to do podcasts and analysis Monday, Tuesday and Wednesday, and then take a brief Christmas holiday, spend the Christmas with my family and take a week off or so. I'm going to post trades if there is going to be any trading, but no podcasts from Thursday and Friday, and also next week will be a little bit a different schedule regarding the podcast. So little break during the Christmas, and then we will start fresh next year. Okay, let's start this episode. Monday morning, welcome, and let's take a look at Euro-USD first. After the rate hike, the decline has been quite sluggish. We might have first 4 waves completed out of the 5-wave sequence. We can see on the chart a 4-wave structure has now formed, and we are very near completion of the 4th wave and can expect one more wave down. We can trade this 5th wave down. We have a sell stop order place, so 108.59, sell stop loss 109.07, and take profit 107.3. Let's take a look at this structure in 1 hour chart and see it in more detail. So from the high and after the rate hike, actually the rate hike peak is the 2nd wave high, which is at 110.1, but where this decline started was the end of the triangle formation, which concluded the minor wave 4 correction in my wave count, and the peak is 110.59. So from that peak we can draw now waves 1 and 2, wave 3, and now forming wave 4. We can see a 3-wave structure which is at or near completion right now. Remember that a 4th wave and 1st wave cannot overlap in Elliott wave principle, so this is the low of the 1st wave. So we can quite safely put our stop loss above the level of the 1st wave low. In this case 109.07 I have my stop loss level, and we can expect a similar wave down for the last wave, for the 5th wave, as was the 1st wave decline, and I calculated this about 150 pips. So this is our potential target, and 107.3 approximately is the 150 pip target. So this trade for Euro-USD, I was expecting, to be honest, quite a different outcome for the rate hike. I was expecting a more powerful decline, maybe even a extended 5th wave out of this minor wave 5. So remember that the 110.59 peak, which was the end of the minor wave 4 correction, and after that the decline in which the rate hike happened. We can actually mark the spot right here was the rate hike peak and resulted in 150 pip, maybe a little bit larger move, but still quite a disappointing reaction actually. I was expecting a powerful move down for this long awaited result, but like I've talked before, news items are not the way to trade. You can of course follow the news, see what news events are on the table in particular days, but this is not the thing that moves the markets. They are only reaction of the previous market moves. So after rate hike we have seen quite sluggish decline out of this pair, on this pair Euro USD, and perhaps now we have seen first 4 waves out of this smaller 5-wave sequence, and our target is the 5th wave, and I have approximated this target to 1073. Let's get back briefly onto the 4-hour chart. So once this 5-wave structure has completed, we can then expect 1 degree larger correction, and this would be then minuet wave 1, and the correction would be minuet wave 2. So 5 waves of minuet degree can be expected to form to complete this 1 degree larger 5-wave structure, and I'm looking for a new long-term low, first below the 1052 and then below 1046, which is the previous long-term low. But we have quite a way to get to those levels. So first we need to see this 5-wave structure completed, and then 1 degree larger correction can take place, and then of course next 5-wave structure to the downside can form. Okay, let's take a look at pound dollar. And in pound dollar we are still more or less within these trend lines. The lower trend line of this wedge shaped formation has made quite a tight range, sideways range. So again, really hard to figure out what is the correct labeling here. Like I have previously mentioned, I have minute wave 2 peak, then minuet wave 2 peak, and now a sub-minuet wave 2 peak. So we have been waiting this third of the third wave. So it should be the most powerful in the sequence. And if we don't get any powerful declines, if we are still within the trend lines, if we get now next move to the upside, this count may need a revision. This third wave is just not going to play out, it seems. There's still of course hope that we see more downside, but as of now I don't see any trading opportunities since we have a very unclear wave structure in pound dollar. Alright, let's go briefly a couple of other pairs. Euro pound, same here. The next large move down just does not want to form. We have a sideways range lasting now a couple of weeks actually. Quite tight range in a 100 pip range. This price has been moving. So my wave count is expecting a downside move next. We can of course get probably a little bit more upside. If we take this price action, we can maybe see some sort of wedge shaped formation forming here. And this would mean that perhaps one more upside move is expected. But in my opinion, the larger trend here is down. And we can expect the next, once we see this minor wave 2 completed, we can expect next larger move to be to the downside. So let's keep an eye on this pair. and look for an opportunity to trade this pair to the downside. We can see briefly Euro Canadian dollar also. Quite similar price structure here as in Euro Pound. We can see a sideways price action for the last week, maybe week and a half. We had this very strong over 1000 pip upside move, which was triggered from the ECB release a couple of weeks back. Remember when Mario Draghi disappointed the market by lowering the interest rates on the negative territory too little. So this was quite a curious news item. I think when we are going to tell these stories to our children and grandchildren, they will have a hard time believing us when we say that interest rates were moved further towards negative territory, and this was of course a positive news for the currency in question. So quite mad times in my opinion we are witnessing. This is unprecedented that there is negative interest rates, and even that we are seeing further and further to the negative territory these rates declined. So the catalyst for this 1000 pip move was the ECB release dated just as this move started, and in my opinion this is ABC structure forming minor wave B within a larger triangle. So next move, a larger move, we should expect to be to the downside, but the price structure is now very unclear and I don't see any trading opportunities to the downside. I would like to see a 5-way structure first. So if the next decline would start right here, we would like to see a small 5-way structure to the downside, and then a 3-wave pullback, and then entry point right here, and we can take advantage of the larger move down, which should be expected to go even as low as 133, where the lower trend line of the larger triangle is. Okay, that's all for today. Visit the show notes at ForexDayBreak.com/92, and let me remind you that you can get this video analysis, daily trading signals, weekly future trades video, books, and access to my trading system when you subscribe to my basic membership. Membership fee is only $10 a month, and I have a 14-day free trial for you to test out my service. You can cancel with one click, so this is truly a risk-free offer. Go to ForexDayBreak.com/basic and sign up today. More trades tomorrow. Happy trading, and I will see you next time. Bye-bye.
Thanks for your interest in Forex Daybreak Daily Podcast. If you like this show, we hope you'll visit our website, www.ForexDayBreak.com. Be sure to check the show notes on our website for this episode. Join us next time for another episode of Forex Daybreak.